Let me check, guys, that we are live or not. So let's start with this. Yeah, I think we are live. Let's start. Okay. So here we go. Uh, Hello warriors. Let's start with this. Now we're gonna start with the standard, which name is AS11. Okay. Asha, sir, this is the summary. If you need already AS2 is uploaded, please check the playlist. All videos I will try to upload in 1 hour. Again, this we will complete in 1 hour. And if you need this summary, description, please check the link. Okay. Now, and check the playlist so that you will get all the details, whatever videos are uploaded. Okay. Everybody, those who are live, they can say hello sir, yes sir, and then I can start with this. Okay, now understand. If I talk about AS11, try to understand this here. First of all, what is the name of this standard? All questions of study material I am going to cover, and all the concepts we will try to cover. Yeah. Naidu, good morning, good noon sir. Yeah, let's start. Yeah. So now if you understand this, what name is written, the effect of changes in foreign exchange rates. Now let us try to understand this standard AS11. Sir, this standard is divided into how many parts? This standard is divided into 3 parts. Foreign currency transactions, forward exchange contract, and there is third part, which is foreign operations. Once you do this, you are done with this standard. Okay, one by one. Sir, what is the chances are there you will get question from this category, that is foreign currency transaction. Sir, try to explain first of all what is this foreign currency transaction. So I will explain this as to what is foreign currency transaction. Try to understand this. Very simple. Let us say I stay in India, so I make my accounts in rupees. Okay, but now I want to purchase one machinery from US, let us say. So if I purchase one machinery from US and that bill is denominated in dollar, but sir, I make my accounts in rupees, so I have to convert that dollar wala bill into rupee wala bill. That is how it will be done, that we will understand. So foreign currency transaction means we have some transaction with any other country and the bill is in the currency which is other than rupees. It can be dollar and all karke. Okay, now understand. Just read, no need to by heart. Transaction which are denominated or requires payment in foreign currency other than rupee, we will say, for India. Now, what transaction can be there? Either you buy and sell goods and services, or you manufacture chair, so you buy chair, you sell chair, or acquisition of asset or sale of asset, or taking loan or lending loan. These are the transactions which are there. Okay, now understand how to do the accounting. That is most important thing. This is just for your clarity purpose, guys. Okay, now try to understand this. First, the transaction happens. Let me do one thing. Even before I start with the things, I will start with a question so that you will have a better, clear idea. Okay, I will be just looking at the chat box, but I won't be replying that much because I want to cover this standard in minimum time. This is examination time, right? So now understand. Let's do one thing. Before I start with the things, I will do 2 questions, question number 2 and 3, and then I will come to this. Things will be very easy for you then. Okay, let us do question number 2 and 3 and things will be very easy for you. So let us come to this question, then we will come to question number 1 and all. Okay, let's start with question number 2. Very easy. Try to understand the things. Okay, you don't write anything, just keep the calculator with yourself and make the calculations just to save the time. Understand. Now, sir, on 1st January, I have purchased goods. $15,000. You understand that the bill is not in rupees, it is in dollars. Okay. And at that time, my exchange rate was 75 rupees. It means for $1, 75 rupees is the rate which is going on. Okay. Now there is a year end which is there on 31st March. Then there is one more rate. There is a fluctuation in the rate. Okay. And I am going to make the payment maybe after 6 months or whatever the months are there. So I made the actual payment. It means it is on credit. The goods are purchased on credit. The payment is made here. And at that time, the rate prevailing in the market was 73. Yes, sir. Ayush, nothing for SCMP as such. You will have to study on your own. Now, understand, nothing is planned. Now, here we go. They are asking us, ascertain the gain and loss, and yeah, how will you record in this 2 years? That is, 1 year is this, which is ended, and then in the next year, how you gonna record the transactions? Okay, one by one, we gonna do that one by one. First of all, the same thing has been summarized here, but I don't think this summary is needed. The same thing in a timeline format, but I won't be referring to that. I will be referring the question. This is extra for just your understanding. I purchased on this date, then this rate was there. Now do one thing for me, just understand. Sir, if I have purchased goods, sir, what is the entry? First tell me, when you purchase the goods, what is the entry? The goods are purchased on this date. So I have written this date. Dekho, I have written, I will just highlight, I have written this date. And sir, if you purchase, so purchase to, have you made the payment? No, you haven't made the payment. So purchase to, yes, Rishabh, that is enough. So the entry will be purchase to creditor. Alright, but sir, there is a problem. I want to record in rupees, right? It is in dollars. So very simple. On that date, what is the spot rate which was there? When I purchased the goods, rate was 75 rupees. So $15,000. If you convert into rupees, a second. Yeah, just a second. Wait. So $15,000, if I just convert into rupees, so I will say, sir, 15,000 into 75 exactly. And you will record at that value 11,25,000. Perfect. But now, after a few months, on balance sheet date, there is a change in rate. There is a change in rate. So I hope you understand now what will happen. First of all, even without understanding anything, any provision of this standard, which is more logical. Now, if I want to pay my creditor $15,000, first I have to buy it from the, we will say that bank somewhere, these dollars I will have to buy. Now for $15,000, what will be my payment? 15,000 into, I am going to pay 74 rupees. If you understand, there is increase in creditors where I was supposed to pay this much, but on balance sheet date there is a gain, I can say. Sorry, there is a gain. Instead of paying 75 rupees, I will have to pay only 74 rupees per dollar. Okay. Or one more thing, there is increase in debt, there is increase in creditors or decrease in creditors. So there is decrease in creditors. Okay. So creditor is on the credit side. If you want to decrease it, it will be appearing on the debit side on balance sheet date. And sir, it is decreasing by 1 rupee. Yes, sir, there is a difference of this 1 rupee. And for how many dollars? $15,000. So 15,000 into 1. So it will reduce. Sir, if reduces, so the difference will be credited as an exchange difference. Acha. And it is a gain, because where you are supposed to pay 75 rupees for every dollar, now you are supposed to pay only 74 rupees. So there is a gain of 1 rupees, which is reflected on the credit side. You can see this. Sir, where will you transfer this gain? This is a gain. You have to transfer it to the P&L account. So there is one entry that you will pass, exchange difference account debit to P&L account, and that gain will be transferred. But sir, there is a twist. Payment is not done yet. Acha sir, one more thing I wanted to know. What sir? On this date, creditors are recorded at what price? Creditors are recorded at 74 rupees, which is 11,10,000. Sorry, whatever is the value. First, let me write. Yeah, it is 11,10,000, 15,000, and on very first day it was recorded at this, but we have reduced it by this now, 1 rupee. So now this is the value which is appearing as a creditor. Now, when I make the payment, am I making the payment at this rate into 74? No. I am making the payment at that time the rate is 73. If the rate is 73, it means first of all you will pass the entry. If I make the payment to the creditor, so what is the entry? Sir, creditor ko I will pay, debit the receiver, creditor to bank, money is going to creditor to bank on July ka date, creditor to bank, and leave one line in between just to adjust the exchange difference. Acha, what is the value of creditor that will be existing in our book? On balance sheet date we recorded that we have reduced 15,000 into 75 by 1 rupee. Now it is appearing at 15,000 into 74. That you will record. It was appearing on the balance sheet date, right? Now when I make the payment, I am making the payment 15,000 into 73 rupees, because when the payment is made, the rate is 73. If you do this, your value becomes 10,95,000. And whatever is the difference, there will be a gain, sir. Have you come to know it is a gain? Where on balance sheet date, I was supposed to pay 74 rupees. Now I have to pay only 73. There is again a gain of 1 rupee. Yes, that is reflected here. You can see the difference. This is a balancing figure. And if it is a gain, it is transferred to P&L account on that date also. Have you understood whatever I wanted to say? Hello. I hope this is clear. One entry is passed here. Then 2 entries are passed here. One exchange gain vagara or loss, and then it is transferred to P&L account. Then 4th entry and 5th entry again. Payment ka entry and gain loss wala entry. If we are good to go, just let me know, yes sir, we understood. I will go with the next question. That should be understandable. This speed should be. Just type yes sir in the chat box. I will come to know. Yes sir, that is understandable. Okay. Chalo. So that I will come to know that, yeah, that is understandable. Yeah, yes, sir. So now let us do one thing. Let us come to this. Let us come to this question number 3. Okay, there are 2 questions and then I will give you that provision for that matter. It is very easy. Now, sir, in the earlier question, I was purchasing goods, but now there is a foreign currency transaction. It is in dollars, but I am taking loan. So, sir, when I borrow, what should be the entry? Sir, when I borrow now, the entry should be this, sir. I have taken loan. So I will say bank account debit to loan account, exactly. But sir, it is $44,50,000. But sir, I want to express that in rupees because my financial statements are prepared in rupees. So sir, for every dollar, what was the rate which was going on? 48 rupees. So you will say 4,50,000 into 48, that is going to be 2 crore 16 lakhs. If you understand, 216 lakhs. That is the entry that you will pass on this date. Okay, but again there is a change. What, sir? On 31st March, if you see, the rate became 49. It means my loan amount, it has increased or decreased? Increased. Where I was supposed to pay only 8 rupees for $1, now I will have to pay for $1 49 rupees. There is increase in loan. So we will say to loan account and difference will be transferred to exchange difference. But sir, what will be the value? So the first entry is done. You can see this. Now the second entry. Sir, there is a loan has increased by 1 rupee, I will say, and this 1 rupee has increased, that is difference of these two for how many dollars? 4,50,000. So 4,50,000, 4,50,000. You can see this entry. Exchange difference to loan account. Loan has increased, and because it is a loss, increase in loan is kind of a loss to the company. That loss will be transferred to the P&L account. So exchange difference will be credited and debit the P&L account. That's it. Understood till here. Now sir, we are making the payment when the loan is repaid. Loan is repaid on this date, which is 31st July. So on this date, when you make the payment, what should be the entry? This will be transferred to P&L account, that we have done now. When you make the payment, entry should be, sir, loan is paid. So loan to bank, exactly. Perfect. But sir, when you say loan to bank, so what the payment when you are making payment for how many dollars? $4,50,000. But when you are making the payment at that time, what is the rate that is going on in the market? The rate that is going on in the market is 49.50. You will multiply. But sir, loan is appearing in our books at what value? Loan is appearing in our books at this value, $4,50,000, and on balance sheet date it was again. On that date, we have recorded it at 49. Again, there is increase by 0.5. You can say that is the exchange difference. That will go here. Exchange difference, kind of a loss. You can see this. I hope that was understandable. That, yeah, you just wrote this. That the loan was appearing at this price. You made the payment at this price and the exchange difference. And whatever is the exchange difference, that has been transferred to the P&L account. I hope the things are very much clear over here. It is quick, little bit faster, but I hope that is understandable. If not, I hope that is understandable. That should be understandable. Okay, please go through the video again, I would say. Okay, now, yes, having done that, sir understood. 2 questions you did. Okay, chalo, now let's come to the concept here again. So yeah, 2 questions we did even without understanding the concept. As such, there is no problem in that. Now let us understand the concept. Sir, when there is a foreign currency transaction, it means if you take a loan in US currency or you buy any goods in US, that is these questions we have solved. So initial recognition means date of transaction. On 1st January, I borrowed the loan. So the loan should be recorded at a spot rate, whatever is the rate at which you should record. Understood? Yeah, so that is clear. Okay, but sir, subsequent recognition is done on balance sheet date. Now this is something that they have written, because even if you don't know this, you can solve the question easily. But let us try to understand few things. There are some items which are monetary items, there are some items which are non-monetary items. Now people have a lot of confusion as to what is monetary items, what is non-monetary items. Let us try to understand this. Dekho, if you see the balance sheet, and by looking at the balance sheet, something is appearing in the balance sheet, and whatever value is appearing, if you can get that value from the market, or you will have to pay that value, it is monetary, it is in terms of money only, just indicated. Nahi samjha, right? Did not get whatever you wanted to say. Chalo, let me give you the example. Suppose if I make this account, if I say, sir, debtor 100, what does it indicate? Today if I liquidate the company, let us assume, and everything goes well, will I get 100 rupees from my debtor? Yes. Or do I have the right to ask for 100 rupees? Yes. So that is, it is a monetary item, because amount receivable or payable is fixed. Whatever is written in the book, that I can get. Okay. So debtor, even if creditor, so whatever amount is written, I will have to pay. Same goes like bill receivable, bill payable, or loan taken or loans, or loan taken or loan given. So these are like monetary. So sir, now let me explain non-monetary, then you will understand what is monetary. Now, if you check the balance sheet, in the balance sheet machinery is appearing, and machinery is appearing at 100 rupees. Does that mean that you will get 100 rupees, or there is a land which is appearing? You bought land, let us say 5 years back. You bought land, let us say 5 years back, and land was bought for 100 rupees in crores, let us say. So now it is appearing at 100 rupees. 3 years back you bought it, so it is appearing at 100. Today if you liquidate the company and if you sell the land, will you get 100 rupees? No. You may get more than 100 or you may get less than 100. It means whatever value is appearing on the balance sheet, it is not necessary that you will get that. You will get more than that or less than that. So here I can say receivable or payable is not fixed. Amount is not fixed. You may get more than that or less than that. That is PPE, intangible, or investment in equity shares. Whatever investment you have, it is not necessary. Whatever market value can differ for that matter. Okay. So now, whatever your monetary items, like when you purchase, understand one more thing. And whatever item comes in the P&L account, these are recorded at. These are not changed. Let me just let me give you the idea. You will understand. When you purchase an asset, let us say, when you purchase an asset, what is the entry? Sir, machine account debit to creditor account. You purchase the machinery on credit, let us say $100, and the rate is going on. The rate which is going on is 70 rupees. The rate which was going on was 70 rupees. So you recorded at 7,000 on very first day. That was the spot rate that you did. That machine to creditor 7,000. Now, sir, there is a technical. Thank you so much. Now understand. Now if I just tell you here, after this, after recording this transaction, if I tell you something like this, that the rate has changed to 75 rupees. It means you cannot increase both. You cannot increase. This is a closing rate on balance sheet date, which is a 75. You cannot say ki machine to creditor. Again, machine will increase by 5 rupees, or we will say that $100 into 5. That 70 ka 75 ho gaya. You will say 100 into 5. Hello. No, you cannot pass this entry. If you do this entry, machine to creditor, that is $100, and exchange rate has increased by 5 rupees, so 500. You cannot be doing that. If you do that, there is no gain or loss. Hello, machine ka value is that only. Machine ka value is 7,000. Okay, there is no change in that. It is non-monetary item. You won't change. It will be at historical rate only. There is no change in that. Something that will change is only creditor, and whatever is extra payment, gain or loss, that will book to P&L account. Please understand. Okay, individuals, if you do not know the rule, we have solved the questions. If question comes, you have to just change this values at closing rate. This will be changed at closing rate. Okay, otherwise this non-monetary items, and there is a logic also for that matter. I will give you the logic if you want to understand. Understand this. There is a land you have purchased. Land was purchased on very first day for $100. Okay. Now, and you recorded at 100 into 70, let us say 7,000. So on 31st March, can I say that land, will you get $100 from the land? No. Acha, rate is 75. So you want to book 5 rupees ka whatever into 5 karke you want to record. You cannot do that, because 100 rupees is not today's rate. 100 rupees is the rate 3 years back when you purchased. If you sell the land today, if it is revalued, let us say I revalued the land and revaluation came to $150, then you will take today's rate, revaluation date ka rate, because it would be inconsistency. That land is appearing earlier value pe historical rate pe 100 pe, and you are taking today's exchange rate. That cannot be happening. So please understand just one thing. Maybe it is too much in detail, so it would be quite confusing. So I would just recommend whatever questions we did, that will serve the purpose for your examination. Okay, it is just one extra understanding that I gave you. Okay, chalo, let us do the question number 1. It will give you the more and just idea. Maybe it will not come in the question, but still. Inventory. Sir, when you say inventory, do you have the right Let us say inventory is appearing at 100 rupees. Do we have the right? Can you say that this person is going to give me 100 rupees? No. When you sell the inventory, you can get more than that or less than that. So it is non-monetary. Not in money terms. You can get more or less than that. But when you say trade receivable 100, it means if it is appearing, it means you will get 100 rupees from someone. For sure, you have the right. So it is monetary item. Trade receivable is monetary item because you will get its money value. Monetary value you can easily get. When you say investment in equity share, if it is appearing at 100, you purchased at 100 rupees maybe 2 months back. But today the value can be different. You will get more than that or less than that. Not exact value. That is non-monetary. If the fixed value you will get, it is monetary. Acha, plant and machinery, not necessarily you will get the same value. It is a non-monetary item. I hope that confusion is clear. A16 lecture will be very helpful. Yeah, Akshay, even I will try to upload that also. Now understand. Question 1 is done, question 2 is done, question 3 is done. If I come to this theory here, again, this chapter is divided into 3 parts. One is foreign currency transactions. We are doing that. If the transaction, I purchase asset or if I take a loan, vagra, how will you record this? Now, sir, things are done. Even if you do not read, questions can be easily solved. In examinations, questions will come. Question 1 is done, 2 is done and 3 is done. Now, there is one special note which is there. One option is given and which is acceptable also. Like if you take a loan to buy a fixed asset, let us say if you purchase a fixed asset, that is PPE, we will say, so fixed asset to loan. Okay. Now the loan was for 100, the asset was for $100, we will say, or fixed asset to loan, or we can say fixed asset to creditors. Kind of a loan which we have. Now in this case, whatever your fixed asset is a non-monetary item. Why sir it is non-monetary? It is not necessary after 1 year you will get the same value. You will get more than that, less than that. But loan is a monetary item because whatever is written that you will have to pay. Okay, fixed amount is monetary. Now understand. Here one sentence is written that is optional. Even if you do not do that, it is completely okay. But it is written loan related to fixed asset, that is a depreciable asset. So exchange difference is adjusted to asset cost. So I didn't get this. Understand, generally if there is increase in loan value, or decrease in loan value, you just write the entry like loan account debit. Let us say loan has increased. So you will say loan to exchange difference. And this exchange difference is transferred to P&L account. You will pass the entry P&L account debit to exchange difference. But try to understand, in this case company has an option. Instead of transferring it to the P&L account, we can transfer this to the fixed asset. We can transfer this to the fixed asset and there it will be added. Sir, why sir? Logical. It is logical. Why you should understand? Dekho, the asset which I have purchased, it is going to be used for next 5 years. It will be used for 5 years. So I will get the benefit of this asset for next 5 years. Understandable. Now, whatever is the exchange loss, if you transfer it today, that is also okay. You have the option. You can transfer the loss today itself. But there were companies who used to buy big machineries and they were having 20 years life. So entire exchange loss was recorded in the first year itself. So the option is given. You just adjust that against the cost of asset. You just add it to the cost of asset, and once it is depreciated, then it will come part by part. That is why this option is given to the company, not necessary. Please understand, little bit complicated, but try to understand this. You can just understand if the asset is depreciable. For this, if the loan is taken, that is a long-term loan, we will say, because it is a long-term, then in that case you can adjust. Instead of writing this P&L account debit to loan account, you have the option, instead of P&L you can write down fixed asset. Okay, exchange difference you can adjust there. Okay, up. That is exchange difference, and then instead of adjusting it to the P&L account, we can adjust it in the fixed asset. Let us do the questions, you will understand more. That is a better idea. There is question number 4 and 6 which is here. Achha sir, long-term loan is there, but it is not for specific asset. I will take the loan, then I will use it as and when I want, but it is a long-term loan. Then in that case, one more account will be prepared, which is FC Metada account. Let us solve the question, you will understand. Sir, what is FC Metada account full form? Foreign currency monetary, that is foreign currency monetary item translation difference account. Let me explain that with the help of questions. Question 4, 5, 6 if I do, you will get more clarity. Let us do this thing, you will understand. Okay, just be there with me, you will understand everything. Now there is one company, again it is from, not from the module, from RTP or MTP, I don't exactly remember the source. Understand, there is a fixed asset which is, acha, now there is a twist. Asset is actually purchased in dollars but it is given in rupees. That it is like, I am in India, let us say I have purchased this asset from, let us say, US. Okay, so it should be in dollars, but just to confuse you, that is given in rupees. Ahead it is written on 1/4 April ko I have purchased in foreign currency. Ek second. A payable in foreign currency on this date. Okay, so I have purchased this asset on this date, which is, you can see that 1st April, and the payment will be made on 5th April. Okay, okay. Exchange rate, if you see, exchange rate is 50 rupees and 54 rupees 0.98 on these dates. Okay, so exchange rate is 50 rupees on this date, and on 31st March it is 54.98. Now try to understand. Yes, it is like this. On very first day when I bought the asset, exchange rate was $1 is equal to 50 rupees. I need how many dollars that bill was. It is just to confuse you. It is given like this. It is 500 lakh rupees is given, 5,000 lakhs. So how many dollars there will be? So 5,000 into 1 divided by 50. You can just divide and you will get $100. It means that transaction was worth rupees $100. Try to understand. Rupees 5,000 lakhs is equivalent to $100 in lakhs, we will say. Okay, $100. Now, on very first day, the exchange rate was 50. So I divided 5,000 divided by 50. I got in dollars. Then the rate became kitna? 54.98. Hello. Then the rate became 54.9 rate, and the payment will be done in the April. Okay. There is just some confusion actually in between. There is a balance sheet date. This should be something, not April, it should be 3 actually. That okay. I have purchased it in the month of March. Then there is in between one year end. Achha, no, okay, that is okay. Ye beginning of the year, that is okay. There is no confusion at all. Please understand. This was purchased on 21. 1 year ended, and I will make the payment after 1 year and 5 days. In the next year, I will make the payment. Now, very first day I must have recorded, because I have purchased asset. I will say fixed asset account debit to creditor account. Sir, it is $100. And if I convert that 100 into 50, it is 5,000, which was already given. So 5,000 rupees. I have just recorded this. Yes, sir, understandable. Again, just a reminder, you can always just like the video. Okay, now understand. Sir, now there is a year end in between. So, sir, if there is a year end in between, you will have to record what? Exchange difference. Okay, sir, this is non-monetary item. Nothing will be done to this. Creditors. To this, you're gonna do something. Whether I will have to make the more payment or less payment. Instead of 50 rupees, you will have to pay 54.98. It means you will have to pay kitna extra? You will have to pay 4.98 extra. Sir, for how many dollars? $100. $100 I will have to pay. Instead of 50, now you will have to pay 54.98, that is 100 into 4.98, that will become 498. And when I say it is 498, entry will be exchange difference to creditor account. Why? Because there is increase in creditor, so you will increase the creditor, but creditor increases, difference will be transferred to exchange difference, and it is a kind of a loss. Increase in creditor, you will have to make the more payment. Okay, understandable. Now, so this exchange difference, where will you transfer? As I said, company has given option. This loan or this amount which is pending, which is payable to the creditor, it is with reference to which asset? Fixed asset. So it is a long term. I will say, even you can see this, the payment will be made, it is a monetary item. When I say this is a creditor, which is a monetary item, and payment will be made within 1 year or more than 1 year, more than 1 year. That is, it is a long term, that I have bought the asset, I will make the payment after 1 year, it is a long term item. So you understand, creditor is a monetary item. Try to understand creditor, because fixed amount will be paid and it is more than 1 year, that is, it is a long term wala part, and it is related to asset. Now you have an option, as I said, option. What entry you will pass? Try to understand, please don't get confused. Your exchange difference will be transferred to P&L. That is one option. That is, exchange difference will be transferred to P&L. But this is one thing which can be done. But company ko option is given. Option is given to the company. It can set it off against fixed asset, because entire loss should not be recorded now then. The loss should be recorded in the life of asset. So if you add it to the asset as a depreciation, it will come in the P&L account in a systematic basis. I hope that was understandable. Asani, I did not get quarter 3 for payment entry. Payment entry, they are not asking for hello. They are specifically asking how it will be accounted here. So I am not worrying about that. Otherwise, I would have made payment entry also. But the question is not going further. They are just saying make the accounting for this. If the payment entry, I would have done it easily. Ki creditor account, again, whatever is the value, that is, this must be the value. 100 into 54, and I need exchange rate to bank ke liye. I need exchange rate. What was the exchange rate, which is not available also in the question? Okay, chalo. So question number 4 is done. Okay, there is one more question for that matter that we will do. Acha, understand. If it is connected to fixed asset, you will adjust it like this. Ki whatever is the exchange difference, like exchange difference to creditor. So where will you adjust? So you will say P&L account debit to exchange difference, but option is given, it can be adjusted to fixed asset. But if it is other, so it is not fixed asset, right? But it is a long-term item. You want to write it off in a systematic basis. So you will transfer it to one account, that is foreign currency monetary item. It is a foreign currency which is monetary item, creditor. Translation, when you translate it in rupees, whatever the difference came, a temporary account, from this amount will be transferred to P&L account in a systematic basis over a period of loan. Let us say loan is for 3 years. So in 3 years, we will take it to the P&L account. Entire should not go in the first year itself, entire loss. Chalo, now let us do one thing. Let's come to this. Which question? Question number 5. As you see, how many questions are there? Question number 4, question number 5, question number 6. Let us do 5 and 6, you will understand. If it is related to asset, adjust it to the asset. That is the option which is there. If it is other wala long term, it will be adjusted to FT metada account. Okay, chalo. Let us do this. Question 3, question 3, 4 is done. 5. Now understand. It is test your knowledge ka 7th question. When only question is written, it is test your knowledge from ICAI material. It is question number 5 in our solution book. Understand. Sir, AS11 I will have to apply. It means there must be some foreign currency transaction here. Trade receivable. I must have sold goods to the debt of someone. Now he is my debtor. Trade receivable in US currency. So now, Umesh, amount I have to receive from Umesh, who is in US, let us say. So I have to receive 5,000. Acha, but sir, transaction must be in dollar. It is a foreign currency. So convert that. Just to confuse you, it is given in rupees. First, it should be in dollars. Okay, it is given the trade transaction date. The rate was 58 point this. So I will say $1 is equal to 58.50 rupees, and I have 5 lakh rupees ka recorded. It means how many dollars must be there? So 5 lakh divided by 58.5. Your value will come to this. Dekho, 5 lakh divided by this. So this many dollars ka trade receivable is appearing. 5 lakh rupees is equivalent to, so 5 lakh rupees when the rate was 58.5. Maybe there is a typing error, thoda sa. It should be 58.50. Huh? I will just change that. 58.50. Okay, it is a summary. Main solution is this. So this many dollars are there, which are recorded on very first date. Okay, value is recorded at 5 lakh. I must have recorded sales, debtor to sales, we can say a debtor to sales at 5 lakh, and how many dollars are there? This many dollars. But sir, on balance sheet date, rate is 61.2. So I hope you understand where I was supposed to receive only 50, and now I am receiving money. Understand, there is increase in debtors. $1 I was supposed to receive 58.5, but now for $1 I am supposed to receive 61.20, because on balance sheet date this is the rate. So if this is the rate on balance sheet date, what will you say? There is increase in debtors. There is increase in debtors. So you will say that this is a difference. That is this 58.5 and 61.2 into this many dollars. This is for $1 extra I will get. So this many extra rupees I will get. So I will say debtors to exchange difference. Increase in debtors, difference is transfers to exchange difference. And whatever is a gain is this time. Increase in debtors is a gain. That will be transferred to P&L account. So exchange difference to P&L account. I hope that was very much understandable. Okay, solutions are already there. Link is given. You can just check the PDF. You will understand that. Now, sir, there is a twist. Acha sir, what is written? Long-term loan. When I say long-term loan, it means company has option. If it is a long-term, that is a special note you need to understand here. Special note. It is a long-term. Okay. So if it is a long-term, if it is related to asset, adjust to asset. That is option. Or if it is other, adjust to FC metada account. Let us see this. There is a long-term item which is there. Okay. 60. Again, I don't need that in 60 lakhs. I need in dollars. When the transaction was done, when the loan was taken, it is loan taken, huh? So it is a kind of a liability for me. So 60 lakh rupees divided by 55.6, that becomes $107,913.67. This many dollars ka loan I have taken. 60 lakhs divided by, it is like I write like this, 60 lakhs here hai. So if I cross multiply, so 60 lakh divided by 55.60. So you will get your this many dollars. Once you get this many dollars, two decimals you can keep. Now I would like to record what? I would like to record gain or loss. That is what I will have to record. Accounting treatment on balance sheet date. That is what they are asking. So there is a gain or there is a loss. So understand, I was supposed to pay for $1.55.60, but on balance sheet date rate has increased. My loan liability, which was 55.60 for $1, now for $1 it is 61.2. So there is increase in loan. When I say there is increase in loan, you will say loan is liability. Liability has increased. Difference should be transferred to exchange difference. That is a loss. So I will say that the rate has 55.6. Instead of this, I will have to pay 61.2. So increases 5.6. You will understand. Sorry, increases 5.6. You will understand. Multiplied by this many dollars. 5.6 multiplied by 107,913.67. Yeah, you're gonna get 6043. Yeah, there is a loss. एक second, something, yeah, nothing, everything is perfect. So this many dollars were there, and there is an increase in dollar, I will say. So increase in liability. So this is the entry which is a loss. Now company has option. Generally, exchange difference is transferred to the P&L account. This is the exchange difference. So this exchange difference will be transferred to P&L account. But because it is a long term, company has option, and ICAI has recorded both the things. You can pass this entry and then you can write note, or you can pass this entry and you can write for note for this also. If I write this entry, I will write note. Alternatively, company has option where this difference will be transferred to a temporary account which is resulted because of monetary item. So foreign currency monetary item which was there, we translated that into rupees. Because of that difference is there, so then it will be amortized over the loan period. Yeah, I will try to cover all the standards. I hope that was understandable. Dekho, it is written. If it is entity, it can be company or it can be other than company. Other than company has no option. Difference should always be transferred. Exchange difference should be transferred to the P&L account. Okay. But if it is a company, then again same entry, exchange difference can be transferred to P&L account, but only for long-term item company has option. It can be transferred to FC Mitada account. Okay, understand this. And if it is a loan related to asset, it will be adjusted against asset then. I hope the things are very much clear. Explain briefly the accounting treatment means should we pass the journal entry? No, when they say accounting treatment, no need to pass the journal entries. When they say but it is recommended you always pass the journal entry for that matter. That is recommended approach. Okay, you should always pass the journal entry as such. Okay, now understand. Okay. So now again, how these transactions would be accounted for. So you always, it is preferable pass the journal entry. Again, there is a fixed asset. Once you just think the fixed asset, sorry, it is a special case. There is a possibility that we can transfer it to the fixed asset. Exchange difference can be adjusted. Okay, now understand. So there is a fixed asset. Acha, 300 lakhs, 3000 lakhs, but I don't need in rupees, I need in dollar. So then this transaction was done on 1st January. The exchange rate was 40 rupees. Exchange rate was 40 rupees on that date, on this date. And then it was 42 on this another date, balance sheet date, let us say. But sir, first day ko, the rate was 42. Now so I will say $1 was 42.5. So I have purchased 300 lakh rupees. So 300 lakh rupees divided by 42.5, that must be 7058.82. This many dollars ka asset I must have purchased, which is given here. Acha, ek second. Some mistake I have done. Why did I take this wrong? What is the mistake? I will tell you. The rate is not 42.5. The rate 42.5 is on balance sheet date, right? When the transaction was done on 1st January, the transaction rate and that spot rate was 40 rupees. So you will say 3000 upon 40, 75 lakhs. So the dollars, if I just denominate in dollars, yeah, it should be 40. Yeah, Naidu, I think it should be 75 lakh dollars, I will say 75 lakh dollars. So 75 lakh dollars, the transaction was in dollars, so this many dollars. But sir, instead of 40 rupees now, so the first step in my entry would be this. If you understand, first step in my entry would be fixed asset account debit to creditor account, fixed asset to creditor account. Kitna sir? 75 lakh rupees, 75 lakh rupees. Oh sorry, 75 nahi, 3000 lakh rupees. 3000 lakh, 3000 lakh. How did it came? Sir, $75, $75 into 40 rupees per dollar. Yeah, that is how it came 3,000 karke. But now, sir, on balance sheet date, the rate has increased. When I say the rate has increased, acha, in this case, your creditor will increase. Yes, sir. To increase in creditor, so you will say to creditor account. Okay. Increase in creditor, so you will say to creditor account. But sir, when you say increase in creditor has increased by what rate? 2.5 rupees. So there are $75 I was supposed to pay. For every dollar I was supposed to pay 40 rupees. Now for every dollar I am supposed to pay 42.5. So there is increase in creditor by 2.5. 75 into 2.5, which is 187.5. Where will you adjust is? It will be exchange difference. But now this 187.5 ka exchange difference, which you can see, 187.5 ka exchange difference, where will you transfer this? So first entry was this purchase ka, second exchange difference ka. This exchange difference can be transferred to P&L account. Hello, exchange difference will be transferred to P&L account. 187.5. See, it is written 187.5 should be transferred to P&L account. But now there is one note. However, it is given on the basis that company has not exercised the option. But if company exercises the option, paragraph you don't have to write, you just write AS11. Note you should always write if both options are available. If company opts for the option, then in that case nothing is required to be done. I will just read this. In this case, just understand what is written. It is written only in the question, the entire exchange difference of foreign exchange has been capitalized. So as an accountant, what you did, you are aware of that. So you have exercised that. You have exercised that option. The exchange difference you have capitalized to fixed asset. You pass this entry. Exchange difference to fixed asset to exchange difference. So that was debited to fixed asset. But company has the option, it can transfer to where? P&L also. So both are right. So entire difference, if you capitalize, then everything is right. But if not, then you can transfer it to the P&L account. Matlab, both answers are right. You can transfer it to the P&L account. If you capitalize, that is also right. Both answers are right. Okay, now understand. So to be very, if I just tell you how many questions we are done with, if I just tell you, we are done with 6 questions. First was what was monetary, what was not monetary karke. Let me ask you one question. I will come to know that you are getting it or not. Just tell me, machinery, it is a monetary item or non-monetary item? Hello. Monetary, it means you get fixed amount. Monetary, in terms of money, you will get same value. Tell me, machine is a monetary item or non-monetary item? Non-monetary item. Okay, because if it is 100 in the balance sheet, doesn't mean you will get 100. But if I say creditor, is it monetary item or non-monetary item? I hope you understand. When I say creditors, it is a monetary item, because if it is written as 100, you will have to pay 100 rupees. 100, it is a monetary item. Yeah. So I hope that was very much clear. Okay, now understand. So sir, we are done with this first part. First part I am done with. Then at the end we will revise this also. So sir, first part is done. Question number 1 to question number 6. Now we will come to second part. There are 2 questions for that matter in the module. Foreign forward exchange contracts. Sir, what is this forward exchange contracts? Let us understand. Let us say, whatever we have done, let us say I'm in India. Try to understand this. I purchase goods from US. So when I purchase goods from US, it is in dollars. Okay, I have to pay $100 to that fellow because I have purchased the goods or the machinery. So I have passed the entry that machine account debit to creditor. Okay, I have passed this entry. But now in this case, you need to understand. That the exchange rate was, let us say 70 rupees. So what exchange rate was? 70 rupees as on that date. So I have recorded it for 7,000. There is no problem. This is 1st Jan, let us say. Now what will come? Balance sheet date will come. Now I worry actually, because I have to make, as an Indian, I will have to pay in dollars. So whatever is the rate of dollar that I will have to pay, let us say I have to pay someone $1, it means I have to pay someone 70 rupees on that date. But on balance sheet date, if rate increases to 73 rupees, I will have to pay 73 rupees. Or let us say rate increases to 80 rupees on balance sheet date, 31st March, or whatever is my payment date. I am thoda sa worrying. Let us say payment, I have purchased goods on 1st Feb, let us say. Now I worry. So payment will be done when? After February, March, April. So payment will be done February ke baad, March, maybe. That is, payment will be done on 1st April, we will say, let us say. Payment will be done on 1st April. Listen to this carefully. Payment will be done on 1st April. Okay. Now understand this. Or एक second, February na, March, April, May. Payment will be done on 1st May, after 3 months if I say 1st May ko. Payment you gonna make the payment after this. So 1st May ko you are going to make the payment, which is after 3 months. Okay. Now understand, you are actually worrying because you feel dollar rate will increase. I will have to make the payment more. For $100, I am expecting as of now 100 into 70, but I feel the rate will be 80 rupees. Now I am worried that I will have to pay 80 rupees. It means $100 I have to make the payment for. It means I will have to make the payment for 8,000. Acha. So this accounting we have done, but now I am going for one option which is known as hedging in FM actually, SFM, CA final, or I will enter into forward contract. Now I am not going in much detail, but just I am giving the context. Now there is one bank says you can do a contract with me. There is one bank, let us say, that it says that you can do a contract with me today itself. I am planning that dollar ka rate will go to 80 rupees $1. So today I have just made a contract with the bank that after 3 months, I will buy a dollar from you at $1 is equal to 73 rupees. So I'm still saving 7 rupees, if you understand. So after 3 months, if I go to this bank, today rate is 70, but I have made a contract with this bank that after 3 months, if I go to this bank will give me $1 for 73 rupees. Some contract is done. Now if you understand, I have a loss of kitna? Instead of 70 rupees, which is recorded on very first day, I know that on the transaction date, there will be a loss. When I make the payment to the creditor, payment will be made for $100 into 73 rupees. What will go out of my pocket is 7,300. It means in future, there will be a loss of 300. Creditor will increase. I have to make extra payment. So this is the loss once I enter into the forward. Acha, how you will get this? Just by heart this format of formula chahiye to, you will say contract rate or forward rate. Contract rate is 73 ka, contract is done. Spot rate is 70, difference is 3 rupees ka. 3 rupees extra, and for how many dollars? $100 ke liye you are paying 3 rupees, so you are paying 300 rupees extra. And these you are paying for how many months? 3 months. So in that case, I will say if that is the case, you are paying 300 rupees extra. So this is the loss to the company, which company knows on very first day. First step, the contract has been entered. Now, whatever is rate in the market, company don't care. Whatever is the rate in the market, because contract is done. Company know my loss is this much. It will not go beyond this 300 rupees. Now, this is for 3 months. So, loss should be recorded on accrual basis. So, for first 2 months, you will record loss of 200. And in the next year, you will record loss of 100. Why? Because 31st March is there. This is 1st May. It means one entire April is there, I will say. So April ka, this loss is for February, March and April. So 200 ka loss will be here in this financial year, 100 ka loss will be here in this financial year. What is the formula? Contract rate minus this. Let us do this question, you will understand. Haan sir, ye whatever you are saying is something understandable. Chalo. Let me do the question is this. Forward contract rates. Yahan pe. Chalo, let's that is we have an agreement with the bank, let us say that I will buy at this rate, forward rate, that is future ka rate we will say. Okay. So let's do the question and then you will understand. There are actually 2 options. We'll understand this, but let us do one question. Here we go. Question number 7. Now, I have purchased a plant. I have purchased a machinery. I have to pay someone $1 lakh. Okay, I have to pay someone $1 lakh, but I am worried. Acha, when the machinery was purchased on 1st February for $1 lakh, the rate which was going on in the market was 1st Feb ko dekho, when you purchased it was 48.85. It means if I have purchased the goods, to purchase to creditor or plant na, to plant to creditor, to creditor ko I will have to make this payment, $1 lakh into 48.85 on that date, on 1st Feb. But sir, I have entered into a forward contract, 3 months contract, where I am ready to pay someone 49 point of that $1 ka I will pay 49.15 because I feel rate will increase beyond this. 49 instead of 49.5, it will increase beyond this. So now try to understand in this case, when you say purchase to creditor, okay, so on first day the rate was 48.85. Still I have entered into a contract where I'm ready to pay 49.15. It means I'm ready to pay kitna extra amount, difference will be these two ka 49.15 minus 48.85. So I'm ready to pay 0.3 for $1. And how many dollars are there? $1 lakh. It means there is a loss. Increase in creditors is a loss. Increase in creditors. 48.85. I'm ready to pay 49.15. But sir, this loss is for 3 months, because understand why the contract is forward rate is for 3 months. This contract. So this loss should be recorded on accrual basis. So 30,000 ka loss for this, and the transaction is entered on 1st February. So February and March, 2 months. So out of 30,000, 20,000 will be recorded here in this year and 10,000 will be recorded in the next year. So this is what it is written. I hope that is understandable. You are buying an asset, you are thinking that a dollar rate will increase, let us enter into a forward rate. Whatever is your loss, calculate that loss and just distribute over a time period. That was very much understandable. We can book the rate before. Manas, I did not get. Sir, please take AS 10 and 16. Arvind will try to do that. Okay, now understand. Sir, let us come to question number 8. Let us come to question number 8. It has some twist. Now, what is a twist? Try to understand. What is the difference between these two? Just understand this. How will you identify the things? I am done with this. That is, so Asha, when I enter into forward contract, do I have the business that every day I enter into a forward contract? No, I just want to hedge my risk. We say I just want to minimize or fix my risk. That is, I say I have purchased an asset. I need to make the payment to the creditor. I want to fix my risk. I don't want to see every day that what is a foreign exchange rate and everything. I don't want to get into that headache. So I enter into a forward contract. In this case, entering into a forward contract, speculation business is not, it is not my business. Speculation is not my business. It is not a trading, not for trading or speculation. I'm not doing speculation or trading of forward contracts. It is just to hedge my risk. I entered. So I will transfer over the contract term. That is what I have done. But now for trading or speculation, it means as and when I enter into a forward contract, it is my business. It means every day I am a person who earns money from this only. Every day I wake up, I see what is the exchange rate. It has, like, you invest in that. Like you also buy forward rates also. You must be having that demat account and everything. Otherwise, I will say trading. You are not doing any other business. This is your business. You just buy forward contracts, you sell forward and everything. So understand. So, but how will you differentiate in the question? I will tell you that. See, here it is written, he has bought a forward contract. There is a difference. In the earlier question, be very careful. I have bought a plant, and to protect the payment so that loss should not be higher than this, I have entered into a forward contract. So to hedge the risk that for $1 lakh, this should be my maximum risk. I won't pay more than this. So main business, I am purchasing a plant, and just to minimize the risk or fix the risk, I am entering into a forward contract, and here I am buying the forward contract. This is my business only. I buy forward contracts, I sell as and when it is profitable. Please understand the difference between these two. Earlier, I was buying machinery, but to protect the payment, I entered into a contract. Here I am buying the contract itself and I am selling it. If I am profitable or loss, whatever it is. Now understand. Here, what you gonna do? Here spot rate and everything, nothing is important for you. You will say it is just the buying price and selling price that is important. When it is your business, entering into a forward contract is your business. You will just look at two things. What is your purchase price? What is your sales price? And difference is profit or loss. So we have bought this forward contract for $1 lakh on 1st December. For this is your purchase price. You have bought this for 47.10. That's it. Only two prices are important for you. You bought it for 47.10 and exchange rate was this. That I don't care. You purchased it at this price. Okay. And on 31st December, he closed the books when this was the rate. I don't care. I just have to look at the two rates. What was my purchase price? What was my sales price? This is my business. So I will just look at two things. When I bought this contract, I bought it for 47.10. When I sell this forward contract, I sold it for what price? 47 point this. 18. It means there is a profit from this. Yes, my purchase, when I bought it, it was bought for this and sold for this. It means there is a profit of 0.08, and this I have earned for $1. And how many dollars ka contract was there for me? $1 lakh ka. So into 1 lakh. So this is my total profit, 8 lakh rupees. I will just consider two prices. The contract was bought at what price, which is purchase price, and this was sold at what price, and whatever is the profit I will book today itself, immediately it will be recorded and not over the period, because this is my business. So when I sell, this is the profit record in this year. When I sell, I hope CA aim, okay, we'll do that. Okay, please understand this, come over here. So please, now I hope you got the differentiation between these two things. Here you purchase an asset, there is some transaction, and to hedge that you enter into a contract. Here you just buy the contract itself, that is your business. So selling price minus cost price into, and that profit will be booked immediately. This is your business, and here it will be over a period, you will say over a contract term, that profit or loss will be booked. Okay, I hope that was understandable. Okay, question number 7 and 8. Okay, in fast track, I'm trying my level best in minimum time to give you the maximum idea about everything. So on some explanation, I will cut short few things, but from exam perspective, that thing will be covered. So that if comes, you should write like this, understand. Now, sir, what is your foreign operation? Understand. This chapter is divided into how many parts? Sir, this chapter is divided into how many parts? So one is foreign currency transaction done, if I enter into a transaction, and after entering into transaction, if I enter into a forward contract, then how accounting should be done? Or if I just buy the forward contract and sell the contract, how accounting should be done? That is also done. Now what is foreign operation? Operation is not something which happens in hospital. Here when I say operation, it means I am in India. Understand this, I am in India. It is like I am in India. And when I say I'm in India, this is holding company. I have one company in US, which is my subsidiary company. So that subsidiary company or joint venture or a branch of this company is known as foreign operation, because that operations are being conducted in country which is other than India. So that is a foreign operation. It means a subsidiary, joint venture or branch of a company which is located outside India is known as foreign operation. Acha sir, meaning we have understood what is foreign operation. Now, what happens if any company is my subsidiary company? You must have studied, or you will study, I will have to make consolidated financial statement. What is consolidated financial statement? I am in India, so my financial statement are in rupees. That is ALM, holding company. The subsidiary company's financial statements are in dollars. So this dollars, because it is in US, right? So its financial statement should be converted into rupees. Foreign operation is my subsidiary. Its financial statement should be converted into rupees. Then only I can do the comparison. I can do the consolidation. I can add it then. I can do the. So it means here what we gonna do, financial statements of subsidiary, which is a foreign operation, we have to convert that in rupees. So how you gonna do that? First of all, if I talk about branch, actually this is mainly done in branch accounts. But just to give you the idea, just to give you the perspective for that matter, branch can be integral or it can be non-integral, that is dependent or not dependent, we will say for that matter. So what should be done? If question comes, you will understand. See, first of all, few things I will tell you. Acha, if I make the accounts, I have purchased goods on 1st Feb. Then I have purchased goods on 31st, let us say 1st March. So as in when I purchase the goods, I just record it at the spot rate, actual rate which is there. So any expense or income should be recorded at actual rate. But sir, there is a problem. Like I can say sales expenses, there can be a purchases, there can be material ka purchases, then can be a labor cost or overhead cost. As in when you make the payment in the foreign exchange, whatever is the rate that you will take, because I made the payment on 1st June, so 1st June ko what was the rate, you just convert that. Okay, sir, If it is an income, so again it is like sales vagara, again that will be at the actual rate. But sir, if actual rate is not available, sometimes what happens, there are thousands of purchases, every day there is a purchase and exchange rate fluctuates. So if in the question, if in the exam actual rate is not given, you will have to take average rate. Actually it is done in detail in branch accounts. I'm just giving you a rough idea, so I'm not explaining in much detail but just giving you the rough idea as to how it is in branch account. It is done in much detail. So first of all, if there is any sale or purchase, if there is any expense or income, it should be recorded at actual rate. But if in exam actual rate is not given, you will take the average rate, because there are thousands of sales, you cannot get actual rate of all, so you will take average rate that will be given. If it is not given, opening rate plus closing rate divided by 2, you will get the rate. Okay. If it is opening stock, the stock is lying in the beginning, so we have that opening stock, we must be having an opening rate recorded at opening rate. Okay. Whatever your monetary items, debtor, creditors, we have learned that on balance sheet date, you record it at what rate? Closing rate. Whatever monetary items you have, it should be at closing rate. And whatever operations which we have for HO के साथ, whatever transactions are there, those will be at actual rates, and that will be given in the question to you. You should not worry. There is one question, if it comes, it will come like this, so just understand. Okay, if it is transaction with the HO, it should be at actual, and that value will be given in the examination. Okay. So sir, I have understood one thing. Expenses or income should be at actual, but actual is not given, so you have to take average. Opening should be at opening rate, and closing pay, which monetary items will come on balance sheet date, whatever balance sheet data, trade, or whatever things are there, it should be at closing rate. Okay, then goods and trade. Then, acha, if I talk about closing stock, now try to understand when I say closing stock. So closing stock means what? See, you have purchased something on 1st Jan, you have purchased something on 1st Feb, and out of these units, 100 units you have purchased, 50 units you have purchased, something is in the closing stock. So this 50 are there in closing stock, and out of this 100, 20 are there in closing stock. So what rate you will take for this 50 units? You will take actual rate of 1st Feb, and for this 20 units which were from 1st Jan, you will take that rate. So for closing stock, you should take actual rate in case of integral operation, because it is my operation only. It is just integral, it means it is part of my company only, it is dependent on me, that branch is dependent on me, so I will say that you will take actual rate. But sir, if actual is again not available, so you will have to take closing rate. Achha, if it is an independent branch, so it does everything at its end. At the end, I just get the balance sheet, so no rate, I don't have those actual rates information, so I will just take the closing rate for that matter. This is something which you should be taking care of. Again, same in case of fixed asset, same thing. Again, if you purchase a fixed asset, it should be recorded at actual rate. Okay, but if it is a non-integral, that is independent branch, it does everything at its end, so at the end I will just get the balance sheet, so the rate which I will take is only closing rate. Okay. Sir, exchange difference, if there is any exchange difference, because integral, it means it is my branch, now it is connected with the branch account. I'm not going in much detail, I just need to wrap up in next 5-10 minutes, so understand. If it is an integral, so it is my branch only, so whatever is the difference, it should be written off in the P&L account, because it is my branch only. But if it is not my, it is like independent branch, it is my part, but it is independent, not dependent on me, it does everything at its own end, then the difference will be transferred to foreign currency translation reserve. One reserve will be there, that's it. One question we will do, and then we are done with this part, guys. Okay, you can always like the video, or you can comment below the video. Yeah. Chalo, there is one question, question number 9 for that matter, illustration 7 in the, we can say that illustration 7 here, understand. So there is one head office which has a branch in UK, you can understand. So head office is in Kolkata, which is India, and branch is like a foreign operation which is in UK. Transactions are there. Okay, now one by one, so all the transactions, so dekho, first of all, there are some rates. First day ka rate is 61, not first day ka. This is financial year. Financial year is what? Financial year is this, X3, X4. Understand? Financial year is X3, X4. So what is your rate? If you just see the rate, so this is the rate. X3 ka rate is this, and ending merit is this. So 63 and 67. Acha, so now the rate is 63 and 67. Ye first day ka rate it is, and this is last day ka rate. Kumari, incomes and expenses should be recorded at spot rate. It should be. But in the exam, if we do not have data, because there will be thousands of purchases, so if you do not have the data, you will record it at average rate in that case. Otherwise, it should be at actual rate only. If data is given, that purchase is made on 1st Jan, Data is given 1st Jan, what was the rate? You will take that. But if nothing is mentioned, you will have to take the average. On an average, this will be the rate then. There will be thousands of purchases, different prices, we will take the average. Now understand. For non-integral, it will be same for both. Hello. For expenses and income, doesn't matter, it will be same. This is same for all. Where there is a difference, these are written. Now understand the question. Very easy as such. Acha, if in the examination they write average rate is 66, so you don't have to calculate the average. If they say, because see, there can be a monthly average, you will take 12 rates and then you will divide by 12. There can be a daily average, 365 rates will be taken divided by 365, or opening and closing divided by 2. There can be various averages. So if any average is given, average rate, you will have to take this. If it is 66, take 66. But if nothing is given, you will calculate 63, 67 divided by 2, you got this average rate. Now one by one. That is first, machinery is purchased and date is given. Hello, date is given. So once date is given and rate is also given on that date, 61 rupees. So into 61, because rate is given. For this 5,000, rate is given at this 6th year, 1st April 20x1, and the rate is given on that date. So when machinery was purchased, at what rate it was purchased, you will say this many pounds. So you will say into 61, we gonna say this. So understand, here machinery ko you will apply the actual rate, the date, because it is given. Acha, from this there is one hint also. Sir, what is the hint? Try to understand. For machinery, which rate was given? Hello, you were having the data. For purchase of asset, if you try to understand, when the asset was purchased, you took which rate? Actual rate, because that information was there. It means there is a hidden that it is integrated. You will have to say that it is integrated, integral operation, because yeah, you have that data that when it was purchased karke, so it is integral, or that is assumed, I will say. Alternatively, another thing can be assumed, integral operation. Understand? Chalo. Now, chalo, otherwise, come here. Debtors. So debtor is a monetary item. It is appearing in the balance sheet. It is a monetary item. It is always recorded at a closing rate. So do we have the closing rate? Yes, 1600. Debtors 1600. We have the closing rate 67. Just multiply with this and you will get this value. Then sir, opening stock is always recorded at opening stock and opening rate is 63. So just multiply this and you will get this answer. Good sir. Goods received from HO. First I will highlight this. Goods received from HO. Answer is given. It is recorded at this value in the HO books, 4,02,000. When transaction was happened between HO and subsidiary, so HO is recorded at what value? It will record at that value only. We have that actual wala value, 4,02,000. So I will just highlight this. 4,02,000 will be recorded. There are other things also with HO. Remittance wala part to HO or head office account wala. These values are there. 1 lakh. These are already converted into rupees. 1,91,000 and 4,90,000. So dekho. 1,91,000 and there was one 4,90,000. 1,91,000 and 4,90,000. Understand this? These two, 1,91,000 and 4,90,000. For others now, sales. So sir, sales, it should be at actual rate, but that is not given in the question. There are thousands of transactions. We will have to take the average rate for sales, incomes and expenses. So we will take 65. Then sir, purchases, again it is up. Thousands of purchases, wages, average rate, salaries, average rate, cash. Cash is lying at the balance sheet date at the end. Cash is there at the end. So if it is there in the end balance sheet date pair, so cash will take the closing rate. Okay. Creditors. Creditors again a monetary item. So 67 will be the closing rate that you're gonna use it. Okay. Now after doing everything, there is a debtor creditor, you will get one balancing figure. Okay, here. This is the exchange difference that will be there. Now it depends. Nothing, even if you do integral or non-integral branch, accordingly it can be transferred to PNL or translation reserve wala part. I am just saying one thing. There are two more adjustments. Closing stock. So closing stock should be recorded at what value? So closing rate 700. So 700 into 67. End mein. 700 into 67, closing stock will be recorded at closing rate. Sir, at what rate you will record the depreciation? Sir, depreciation is on machinery. So depreciation will be recorded at the rate at which machinery was purchased. So sir, the machinery was purchased at that time. We have used which rate for machinery? Is depreciation, so 61 rupees wala rate is used. So 500 into 61 and you will get this value. That's it sir. So that is something which is completion. Let me just wrap up this in 2 minutes. Now understand. If I just talk about Ind AS, AS11 is it has three part: foreign currency transaction, foreign forward contracts, and foreign operations. Foreign operation, you just need to remember for income and expenses it is always actual rate, but if it is not given you have to take average rate. Okay, and accordingly we have done कि opening के लिए opening rate, and then we can say that opening ke baad there was we can say monetary items, again these are at the closing rates, and then closing stock ke liye वगैरह, that is something which we have done. Then there is the, yeah, thank you so much Harsha. Then there is a forward contract. Please understand whether it is your business or not. If you purchase an asset, then to protect that you enter into a contract, it should be over a period of time then. But it is your business, you buy forward contract, sell forward contract. Only two rates are important: buying rate and selling rate. Take the difference and it will be go to the P&L account immediately in the date on which you sold that. Okay, then foreign currency transaction, we just did that closing, you will just transfer the values to the P&L account. And just for one thing, if it is related to fixed asset, it will be exchange difference can be adjusted against fixed asset, and if it is long term but not for fixed asset, then it can be adjusted against FC Metada account, temporary account. That's it guys. So that was a revision, a little bit complicated standard as such. Please do revise that. Hopefully that will help you in your revision. That is max what I can do in 1 hour. It takes 4 to 5 hours to explain in detail, but I'm trying in 1 hour. So obviously there will be a little bit compromise, but yeah, if you like the video, again a reminder, you can like the videos. If you haven't subscribed, subscribe the channel, and you can always comment if time permits for you guys as hashtag CARMR. Yeah, full clear. Thank you so much. Yeah, everybody. Yeah. Yes, Harsha, Mansi, Naidu, Kumari, Nikita, Sneha, कुछ लोगों का नाम Manasa, I think, TM I can say, and FB, yeah, Kumari. Yeah, thank you so much. Let me just end the session. We'll meet in the next